performance has been better if you compare with various parameters what we have declared yesterday. And there are also other areas which I consider them as challenges to overcome in the next few quarters in the current financial year. Coming to profitability, we have shown a profit of 1,023 crores. It is a threefold increase compared to last year. And it is also more than twofold increase compared to what we have done in the month of March quarter. With respect to other important parameters, we have shown a CASA growth of more than 7%, retail term deposit growth of more than 10%. There has been an improvement in operating profit, net interest margin, and then even net interest income. So all these factors have grown positively. And then we also could control cost to income ratio. And in the digital piece, we have enhanced our digital piece in such a way that 60% of the transactions are routed through digital, another 11% through ATMs. That means 71% of the total transactions are other than branch banking transactions. These are all the positive factors. On the other side, where we see challenge is number one, corporate credit growth, which has not been very high. And even in RAM growth, though it has been moderate, we expect it to be much better in the next few quarters. With respect to asset quality, splitting into two parts, one is collections, another is NPA improvement, though we have done by recovering for more than 8,700 crores during the current quarter, Q1, we still see that there is much good amount of scope in the residual part of the financial year. And we have done very well in terms of capital adequacy ratio. If you have observed 15.19, much above the requirement. So we have created a healthy position in terms of the risk-weighted assets so that we can take care of the growth what we are expecting in the current financial year. So these are in brief the parameters which we have shown improvement at the end of June.
So you did speak to us about some of the challenges that you foresee as well. Having said that, one of the challenges that industry-wide we have seen this time around is that on the retail delinquencies front. Give us a picture of where things stand on the retail loans, because for some of the other banks, that has been one of the key concerns coming in.
I do agree that it is a concern that more so because of the COVID second wave, it has aggravated whatever was there in the impact of COVID-1. However, I don't see the long-term phenomena to be a very big challenge in terms of NPA in retail. I expect the retail NPA to moderate and go down in the next couple of quarters. The area of concern will continue in terms of the MSME. MSME also we have seen industry-wide good amount of NPA accretion, and this challenge will remain up to Q4 of the current financial year because we need to see the businesses improving. In terms of retail, in the next 2 quarters, the improvement will be observed in terms of the banking industry as well as in PNB.
So give us a sense of the slippages as well as on the recoveries front as well. What is the outlook for the coming quarters as well? We have seen on the asset quality front, a lot has been done. Slippages have been lower this time around. But given the fact that there's, of course, a concern of a third impending wave as well, what is the outlook ahead for slippages, and how do you see recoveries panning out as well?
See, if you observe the COVID second wave impact on economy, it was limited. However, COVID second wave has impacted sociologically, where the number of deaths were very many. As a result, there was a fear in among the public compared to COVID-1. However, in the economy, the limited impact was there in the months of April and May. We have seen good amount of collections improvement in June and July. That is why we could control the slippages. Otherwise, the slippages were much higher at the end of May. However, because of recoveries, it has toned down, and at the end of June, we have controlled it to around 8,000 crores. Similarly, even if there is an impending danger related to COVID third wave, I do not see it impacting the economy as such, because there could be some of the areas which probably with due planning by the central as well as state governments, it can be overcome. From the economy perspective, I'm not seeing much of an impact from the COVID third wave. The collections will improve, as I have said. Retail sector, I'm very confident that it will come back to normalcy in the next 2 quarters. Only we have to closely handhold with the MSME sector to see that they improve by Q4 of the financial year.
I was talking to you about the recovery front as well. In the quarter gone by, we had seen recoveries, in fact, really improving for a lot of the other banks, including SBI as well. There is that Kingfisher, loans that were given out. There we had seen ED helping in a lot of recovery. Besides that, some of the, processes that were there in the IBC as well. So where do things stand for some of these, large NPAs for Punjab National Bank?
See, as far as the recovery in Kingfisher is concerned, it is a very good judgment from the NCLAT level, which has paved the way for immediately liquidating the securities which were held on behalf of the creditors, that is committee of creditors. As a result, we also received recovery little over 1,000 crores in the month of June. Little amount of further recovery came in the month of July as well from that group. Now, moving forward to look at, I am expecting DHFL recovery should come forth, and there are few more accounts where the settlements were done where we have received the recovery during the current quarter, that is in the Q2. So I expect that while corporate book recoveries are not much left out in terms of the some of the cases, but then they will be coming up consistently up to during the current financial year. There is also a proposal to that bank which is being floated. Those formalities also will be completed, I believe, by September. So all these factors will contribute to recovery during the residual part of current financial year. And we do definitely expect a good amount of recovery, having seen that recovery and upgradation amounting to more than 8,500 crores in Q1 itself. And the similar amount of consistency I'm expecting in each quarter in the current financial year.
You did say that the corporate credit side is is the side where some of the concern is really coming in from. Having said that, when do you see things really stabilizing on the corporate credit front, or do you believe that corporates are still holding tight, given the fact that there's a lot of uncertainty in the outlook going forward?
See, corporate credit, if you have seen in the last 1.5 years, or even a little over 1.5 years, when in September 2019, October 2019, government has come out with tax reforms, we have not seen much of a fresh investment coming up. There are two reasons. One reason is attributable to COVID because of uncertainty. Not many corporates have come forward for investment. Second, some of the corporates have deleveraged their balance sheet by going to the public or selling their equity stake. As a result, they got cash and they have reduced their liability outstandings with the banks. Third reason is through IBC in the last 4 years, many of the ongoing concerns have been settled, as a result of which those who have taken these companies have got additional capacity utilization, not requiring for any new investment in the new ventures. So these are all the reasons why corporate growth has been muted. And the fourth reason is because of high amount of liquidity available in the market. The interest rates have gone down very well. So it was a cutthroat competition in interest rate for holding on to the corporates. Now I see that the corporate growth will come because all these things what I have factored and put before you have come to a maturity. Now we are looking forward for positivity from the corporates in terms of fresh investment. I foresee that from October, November onwards, good investments are expected. So whereby corporate growth is currently visible, road sector is coming back normally, even in cement, even in steel, small projects are coming up where there is a requirement of credit, logistics sector, even in the warehouse, and then this cold storages. So we are seeing a good amount of green shoots in various areas in fresh investment where we see that corporate growth could be there. But robust growth will start coming in the Q3 of the current financial year.
Okay, before I let you go, Mr. Rao, this is going to be my last question. Give us a sense of where things are as far as the PNB housing financed stake sale is concerned. When do you see some of those regulatory clearances being done?
No, we avoid the judgment from SCAT. So it is a quasi-judicial or judicial level position is there. So everybody will follow the judgment to be given by the SCAT, which has reserved the judgment. So we are expecting any time.